So today we're going to be talking about 4 dividends that you can buy now and hold forever as a dividend investor, which I love talking about dividends. So let's go ahead and talk about these 4 different companies. Now, I'm going to show you guys here on screen some information about these companies. So the very first one is going to be with Aflac. Now, Aflac has been actually paying out dividends for 38 years, and they have a dividend yield currently, as of this recording, at 3.01%. But the thing that I really love the most when it comes to Aflac is actually their payout ratio. So right now, their payout ratio is 26.05%, which is a fantastic metric when it comes to that payout ratio, because for most companies, they try to keep it around 60% or lower. And this pretty much means that the company has a room to grow their dividend every single year if they needed to and or wanted to. And so for me, this is a fantastic way to see, is this company going to be viable long-term when it comes to a payout every single year and or even an increase every year. So like we talked about, 3.01 dividend yield, which equals out to $1.12 annually. Now, they do pay out quarterly, which is always nice when the company does that. So that is 28 cents per share. Again, that is as of this recording. Their 5-year growth rate right now is 7.57%, which is good because that is definitely keeping up with inflation. I personally like the double digits, but still really great when it comes to keeping up with inflation and then still making your money worth more. And then as far as dividend growth rate, this has been going up for 38 years. So I think that's fantastic. That speaks to a lot of longevity for this company, especially with such a low payout ratio. Now, the next company on this list is going to be with Johnson & Johnson. So Johnson & Johnson currently has a dividend yield of 2.79%, which equals out to a $4.04 payout annually. They do pay out quarterly as well, which equals out to $1.01 every single quarter per share. Now, their payout ratio is still well below the 60% at 52.41%, which is fantastic. They've been paying out dividends for 57 years. So not the top when it comes to paying out dividends, but some of the highest when it comes to amount of years paying out those dividends. And then their 5-year growth rate is a little bit lower than Aflac, but still great at 6.32%. Again, I like companies that are keeping above inflation just because that means every time I get paid out dividends, especially if I'm not reinvesting in the company at the time, I'm actually making more money every single year because of that growth rate. And after everything happened in early 2020, they actually still raised their dividend quite a bit. Let me see here. So when we hit April 14th of 2020, they actually increased their dividend by 6.3%. So kind of keeping up with their 5-year average there. But that was still pretty impressive for a lot of people when it came to everything that was going on in the market at that time. Now, next up on this list is going to be AT&T. So AT&T is a pretty heavy favorite when it comes to dividend investors. As of this recording, their dividend yield is at a 6.53%, which is honestly amazing. If you are a fan of AT&T and like them and their books and everything else, 6.53% yield is pretty fantastic. Their annual payout is $2.08. They pay out on a quarterly basis, so that means 52 cents per share that you have with AT&T. Their payout ratio is 64.38%, so pretty solid on there, just a little bit above the 60% marker that we try to kind of go for. And then they've been paying out dividends for 35 solid years. Now, their 5-year growth rate is pretty low. It's at 2.09%, and this one is barely keeping up with inflation. That, for me personally, right now with the dividend yield that they have, I'm okay with. If, in another 5 years, if I'm still wanting to buy in, but their dividend yield is at like 3% and their 5-year growth is at that 2%, I might not be considering to invest a lot more, but the money I already have in there is obviously giving me that high yield because the yield on cost. I would probably hold off on investing more if that 5-year growth rate didn't go up and the dividend yield went down. So if these essentially stayed down together, I wouldn't do it. But if the dividend yield went down, but the growth rate went up, I would definitely actually at that point consider to continue to invest more, because there's nothing wrong with investing in a company that you like with dividends, but then maybe not investing as much if maybe their stock went up like crazy, so their dividend yield went down, because that means your money is not going to return you as much when it comes to those dividend earnings. Now, the next one on this is going to be with Target. Now, Target is definitely an interesting one when it comes to having and holding for long term, mainly because, one, their dividend is fairly low in comparison to a lot of the other companies we talked about here today. They are at a 2.25% dividend yield. Their annual payout is $2.64. They do pay out on a quarterly basis. Kind of cut that off there. On a quarterly basis here, which equals out to 66. What am I doing? I'm like messing this all up all over the place. Comes out to 66 cents a dividend. Now, their payout ratio is nicely under 60%, so that is always good. Paying dividends out for 52 years, so they are a dividend king. That means that they have been paying for over 50 years. And then their 5-year growth rate is nicely above that inflation rate at 6.47%. So that is good as far as increasing your yield on cost, and then obviously keeping up with inflation, so that way your money consistently stays up in value and not depreciating over time. Now, of course, these are all just subject to the things that I've done research on and going through the back ends of figuring out what might work best for my portfolio and my financial goals. So I would highly recommend, of course, always doing that extra research for yourself. But I believe these are great companies that you can buy into and hold into for such a long time to be able to create passive income for the long term. That's what I'm planning on doing with my dividend investing portfolio with M1 Finance. I've showcased it quite a bit on this channel as well. You can check it out. I'll have my video right over here where you can continue to follow my dividend investing journey, and hopefully that helps you out when it comes to your journey as well. Thank you so much for watching, and I'll see you in the next video.